So please just ignore this. This was an analysis that we were doing, I think it was 2 days ago, with the markets that we usually trade. And today, the main point that I wanted to sort of like reiterate today, as I usually do, is the concept of structure, right? So if you guys remember, I sent through a picture, right, a screenshot rather, earlier today with a trade setup that I actually took, right? Because we did discuss the trade setup on Monday. It's just that obviously I didn't send out a mass email or a mass SMS or message on Telegram to say, hey guys, let's jump in now. But the trade setup is a very basic and simple one, and it's something that I do believe if you spend some time consistently doing, you will be able to make some money off it. You'll be able to make some decent income with this one particular trade setup. Right? Now, there's not a lot of secrets or how can I say this, or nuances to that particular setup. Okay, there's not much you can add, right, or take away, because as is, it's very simplified. And the main point of it is for it to remain simplified. Okay, I know there's a certain urge within us to want to have the flashiest trading system, okay, which has the most amount of indicators, oscillators or lines or whatever the case may be. So with that being said, that can cause a lot of problems in terms of execution, because the more rules that you have within your trading system, the more difficult it is going to be for you to actually execute and to get trade signals. Okay, so what we're going to be doing now is just going through that particular trade setup and taking a few points from there and just moving it along for tomorrow's session. Okay, so I'll try not to be too fast. I know guys previously used to complain about that when I talk, sort of like I'm talking to the more advanced guys. So what I'll do, beginners stuff is just going to be me going easy, and the advanced stuff, obviously, I can go off and talk about all these other, I can say, exotic concepts, right? The more exciting stuff that the guys like to attend sessions with. Okay. So looking at the GBP USD, obviously it's important to note what the overall trend directional bias actually is. Okay, so if you understand what a trend directional bias is, okay, then you understand why it's important to sort of follow what your bias actually has sort of like directed you. Okay, because if you're looking at a trend, let's say it's going through to the daily, right? If you're looking at a trend, right, and the trend is down, okay, your directional bias will be to short the market, okay, because the market is heading down, it's in a decline, so we're expecting the currency pair to depreciate in value, and therefore to provide opportunities for us to short the market. We don't really want to be biased, because there's not a lot of, I have to say, bang for your buck that you're going to get if you buy a market that is dropping. Okay. Now, I've discussed this, I don't know how many times, but the good thing is I'll continue to repeat it over and over again. Okay. The fact that there is this need for guys to go against the trend or to go against the grain, because they believe that if you want to make money in the markets, you have to be against what most people are doing and be in line with what a few elitists are actually doing in the market. But it's a bit more complex and complicated than that. Okay. Just because the market is dropping, it doesn't mean that the retail world or the unsuccessful traders in general aren't on the trend down. It doesn't mean that at all. Okay? So what you want to do in the long term, okay, you want to get the biggest chunks out of the market in the obvious trend direction. Okay. Because if you're trying to make things complicated for yourself, right? If you want trading to be complicated, trading can complicate your life. Okay? If you want it to take up 12 hours of your day, it's basically going to take up 12 hours of your day. Okay? So what you need to do is look for obvious trade setups in one directional bias. In this instance, let's just say on the GBP USD, since we have been in an aggressive downward trend that the market is heading downward, so we're looking at short-term opportunities. Okay. Now, what are the clues that give us an idea that the trend has been down or is actually down? Let's just ignore this past 2 months, right? So let's just say 3 months, this past 3 months. So what we're looking at is the price action. Okay, where did I drop that? Okay, let's just cut that off there. So this is what we're focusing on right now, and what gave it away that we are in a decline or we are in a depreciating market. Okay, first it would be the moving average. The moving average is hovering about the price action. Okay, so the price is below where that 200 moving average on the daily time frame is actually is. Okay. Now that's the first clue. Second clue is the market is making aggressive moves to the downside, and you have these sideways consolidations. The market is moving sideways. It's very choppy, and then it continues to move downwards again. Choppiness again, and then it continues to move downwards again. Okay, then some choppiness around, and here it popped on the upside. Okay, now the most critical, the most important thing about a trend is that if the trend is going down, the trend is heading downwards, then the drops are going to be a bit more aggressive than the rises. The market might rise, right? You might get the market pushed up 100 or 50 pips or 70 pips. But in essence, overall, the trend will give you like 600 pips, 400 pips, 800 pips when it drops in a downtrend, as opposed to when it rises in an uptrend, it's probably going to give you like 50 or 100 pips at most. Okay, so that is one of the key elements that we need to focus on, and that is the real reason why I would like to get onto a market that is beginning a trend, right, which is pretty obvious to see, or a market that is in a trending state. Right, when the market is in a trading state, it doesn't really matter where you get in the middle or the first quarter of the move or the last quarter of the move, as long as you got into the trend and you got in at a safe place, right? Because if you start trying to pick out where this top is going to be or where the bottom is going to be, most of the time your stop loss will be triggered. Okay? And what's going to happen is that is going to cause you to look at markets in a different way. Okay, guys, are with me? Okay, you guys are with me? Okay. So, as I was saying, these drops on the downside are more aggressive on the GBP USD on the daily time frame. These drops going down, they are going to be more aggressive because the market is trending downwards. Okay, the bias is still down, and therefore the drops are going to be aggressive on the downside. Now, if you are shorting or if you are looking to commit your money into a position, so if you're looking to commit your capital into a position, you want it to be a high probability trade setup. Okay. You want there to be absolutely very little doubt in your mind about how well the actual trade setup actually is, if I'm making sense. So you don't want there to be sort of like this gray area about whether I should get in or not. You want it to be either black, right? Black being let me get in, or white, right? White meaning this one is not for me. Okay, let me pass on this one. So these pushes to the downside are essentially the moves that we want to get on. Okay. And on the upside, obviously these are the moves that we actually want to get on. And I've shown this countless times. And when we're doing analysis every single Monday, I talk about these markets. I talk about if the market does this at this area, then this is what we do. Right? So we play around a lot with the scenarios. Like if the market drops, let's say on the GBP USD, for example, we'd like to see it drop down to 127 even, and then rise to 131 even. Right, just as an example. I would like to see that, but I'm just using this as an example. Okay. Now, if that's what we're looking for, then we're looking for the impulse move to get in. But this means that most of the time we're going to be trading markets that are actually moving. But we must remember that a large percentage of the time the market is moving sideways. Okay? It could be anywhere between 70 to 75% of the time the market will be moving sideways. It's not really going anywhere. And then about 10 or rather 15 to 20% of the time, or 20 to 25% of the time, sorry, the market will be trending in one direction. Okay, now that's a significant difference. Right now we can sort of like give credit to a lot of different things like algorithmic trading and just an influx of traders in general. But actual outcome is that the market will move sideways most of the time and will move in one of two directions sometimes. So on that 30 or 25% of the time, when the market moves aggressively, you might see the market move, let's say 1 month, GBP USD. Okay, so out of this, because this is 1 month from this period separated to this one, this is 1 full month. Okay, we see this, right? This looks like a very aggressive move to the upside. Okay, this looks like a very aggressive move that happened in September. But if we were to actually count the amount of days versus the amount of days that the market was moving sideways, you probably realize that it wasn't up all the time. The market had some times or a few days where it just moved sideways. And that basically gives us an idea of what we're talking about right now, that the market will range most of the time. So if we look at it like in terms of numbers, all right, so this is 1 day, 2 days, okay, and this is a non-movement type of day.